Hello, everyone. My name is Luis Doldan, and today with me we have a very special guest, Alistair Steele, CEO of Gold Mining Inc. It's a big pleasure. Thank you for coming to the show today, Alistair. How are you?
I'm doing very well today. It's certainly my pleasure to be here today, Luis.
Thanks. Well, as it's your first time in this show, why don't you tell us a little bit of your background, of areas of expertise? And I'm also really curious about you jump from the majors to Gold Mining Inc. Why that change?
Yeah, absolutely. Pleasure to tell you my story. I started my career as a geologist, and I started working in gold mines in northern Ontario, in places like Kirkland Lake and Timmins, major gold mining centers, where I had worked for majors such as Kinross and Placer Dome and Goldcorp, and really got a career in the mining industry with operations and exploration. And then sometime around 2007, I had the opportunity to move to Vancouver to join a team at Goldcorp, which was then one of the largest gold mining companies in the world, to work in their corporate development team, where I stayed for a number of years and toured projects globally, looking for acquisitions and opportunities to buy projects, add to a very compelling growth story at a major operating company. And it was in that journey I had some great experiences, including a stint of some 3.5 years. I lived in Argentina, where I built the Cerro Negro mine in Santa Cruz in the southern part of the country. And that was a 500,000 ounce per year underground operation, so a major operation and still being run by Newmont. And when I came back to Vancouver, I worked on a few other projects with Goldcorp. And then just a few years ago, I was involved with, at the time, was the largest gold mining transaction in history, where Newmont merged with Goldcorp to create a much larger gold mining company. I had the pleasure of staying with them for about a year and a half. But I was intrigued because I'd built up a 24-year package of a severance opportunity, effectively. And I was presented an opportunity to work for a company such Gold Mining Inc., who I'd known the manager and the chairman of for a number of years. And I thought it was a great transition for my career to move from a major where I'd had almost 25 years to go work for a company with an incredible portfolio of assets throughout the Americas. And I looked at it like a blank canvas, where they had been not very active in advancing those projects, but I saw a tremendous opportunity to unlock value for those projects. So that's why I joined Gold Mining a couple of years ago, and I've spent the last several years there growing and advancing that portfolio, which I'll be happy to tell you more about today.
That's right. Well, that's a good start. Very big resume in a lot of years, a lot of experience. Let's focus a little bit on Gold Mining Inc. You serve as the CEO of Gold Mining Inc. From my point of view, gold mining, it has had two very remarkable different stages. One, acquiring properties, incubating them, and now phase two, which is, as you said, unlocking value for shareholders. Why you are your team and the prior team before that went to this journey in the bear market, and what's the next step for Gold Mining Inc.? A little bit of introduction and where are we going?
That's a great question, and it highlights well the history of gold mining as a company, which was really led by Amir Adnani and his team, and they were very efficient and made a great history of acquiring properties during downturns in the cycle. So when the price of gold was down or when the markets were tough, companies were in stressed situations, gold mining was there to acquire properties. And during that, some 10 years, acquired a portfolio of almost 32 million gold equivalent ounces. So a tremendous portfolio. However, once you acquire so much, you then have to make a decision: do we keep acquiring and making an inventory of projects, or do we see an opportunity to advance projects and demonstrate the value and effectively create the sum of the parts is more than the whole. And that's where my role came in, which was a transition for the company, which went from acquiring to, as you say, into a harvest mode or into an execution mode to advance projects. And that was my background, advancing projects with connections to the industry. How can we put value on our balance sheet for our shareholders? So that was the transition. That was the phase where I specifically came in to help transition the company. And we've started on that journey with a few very successful transactions already now.
Exactly. It's very, very interesting, the gold mining in story, because how many projects do you have currently? 14, something like that? It's the
some 14 total projects, yeah.
14 all across the America. And as you said, the sum of the parts, it's much bigger than the market capitalization now. I'm going to share my screen because I think people don't realize what this means, and maybe you can tell us about the mergers and acquisition multiples with this picture. There is here. Oh, sorry. Here we can see that gold mining in with the market capitalization that it has right now, which is 157 million, and the strong balance sheet that you've done with spinning out. We are going to go deeply more in details about each project, but it has a negative enterprise value and 24 million almost ounces left. What it means to have a negative value of EV per ounce?
This slide, I think, sums up the story very well. And effectively what it means is that the cash that the company has and the shares we have in publicly traded companies, which is principally Gold Royalty Corporation, which we can talk about in a minute, and US Gold Mining Inc., which was a new vehicle we created, both publicly traded companies, both on the, well, actually, one's on the New York Stock Exchange, one's on the NASDAQ. The market is telling us right now that the value of those shares plus our cash is less than our market cap that we're trading as a company, just with those entities alone. And then I like to think that the 23 million ounces that we have in resources, an investor in gold mining actually gets for free right now. Yeah. So it's tremendous leverage to the price of gold. There's a disconnect between what the market sees on our balance sheet, which are fixed and tangible assets, and then the resource projects that we have, which are not even being factored into the equation. So we talked about those two projects, or those two companies we created, Gold Royalty Corp, US Gold Mining Inc. It's now the next phase where we take that 23 million ounces and demonstrate to the market the value there, where surely this disconnect will be realized by the market and the price of Gold Mining Inc. will go forward. Having a negative enterprise value is extremely rare. It's a very unusual circumstance. I think the market is just simply missing the key assets the company has. As a comparable, I would like to think that many resource-based companies trade in the order of $30 to $40 per resource ounce. So you can start doing the quick math with 20 plus million ounces, times $30 or $40 per ounce, plus almost $200 million in tangible assets. You start looking to be, where the range of the market cap of the company could easily be. And this is not using, the high end of the values. This is sort of a basket of composite stocks across the lower range. We've seen companies such as Newmont and Goldcorp and Kinross, when they actually go to acquire a property, when they want to add to their pipeline, they're often paying in excess of $100 per ounce for specific projects. So you can see the tremendous upside that an investor would get by owning shares in Gold Mining Inc.
Exactly, that sums up very well. We have the other day David Garofalo as well as a special guest. He told us a little bit the same thing, the scarcity premium that those ounces in the ground could have 3, 4, 5 years into the future if the companies are starting to merge and acquire projects. So maybe what the market is missing is like understanding each project by itself and giving value that it deserves. Maybe we can talk a little bit about some flagship assets that Gold Mining Inc. has, a little bit, touch a little bit of the key highlights of them. For example, we can start for the Whistler project, which is the last IPO that you made. You retain 80% of that market capitalization, which is, and what are the unanswered questions that you want to to make with that IPO and unlock value?
Well, I think the nice thing that the Whistler project, which we launched recently as US Gold Mining Inc. on the NASDAQ, just about 1 month ago, actually, April 24th. The interesting thing that's you can point to your followers and our shareholders is the market cap of a company we created, which we have 80% of, is now more than the market cap of the parent company who created that asset.
Yeah.
So that's the type of value that can be delivered by putting these projects into different vehicles. The nice thing I like about our Whistler project and US Gold Mining Inc. is the size of the resource. It's some 9.5 million gold equivalent ounces. It's in all categories. It's in a great jurisdiction. It's in Alaska, in the United States. It's being led by a colleague of mine who I worked with at Goldcorp and Newmont, a very experienced explorationist, Tim Smith, who spent years working in the north in places such as Yukon, which is beside Alaska. Had a great discovery there, which he sold on to the majors at Goldcorp. Tim's leading the team, so a large resource in a great jurisdiction. Has a little bonus because it has a little copper occurring with the gold, about 30% of the revenue. And copper is a very strategic metal these days, declared so by the state of Alaska. So it adds for a very exciting story. And what we're very encouraged with just in the last few months as we've launched this company, the market has suddenly come to the realization that, hey, this Whistler project was buried within a portfolio of other assets not seeing the light of day. The project hasn't been drilled in 10 years. So a lot of new information that can go into that model. The gold price when we acquired it was close to $1,200 per ounce. Copper was around $1.50 a pound. So there's a lot of new value captured, a lot of exploration expertise we bring in with Tim. And we're excited that we've actually now mobilized to the project. We raised $20 million to advance the project, and we'll be drilling in the next couple of months there.
Exactly. And a very interesting, curious thing for listeners is that I believe, correct me if I'm wrong, that you purchased the Whistler project for something like $2 million in stock, and now it's worth on the balance sheet of gold mining around 120 million. So that's like 70x of your money.
It has been a good return, and I think that illustrates a few things. One is that we acquired it at a very opportune moment. The company that we acquired it from was forced to sell it when the market was down and they had very little options. So it was a very, very opportunistic buy for gold mining, very smart buy, and that's been the history of the company. And we did pay in stock at the time. So largely a stock transaction. So those values change with time as stock values change. But yes, it really illustrates the value that comes from acquiring at opportune moments and then launching them, as we've just talked about, on the NASDAQ stock exchange, and able to raise $20 million in a market that was very challenging. And people said, well, can you raise money on a project at this time? And the answer quite simply is yes, we can. And we did. We've brought in an experienced board to lead and work with us there. I'll take a role as chairman of that company to oversee the development there. And I say very excited that Tim Smith, our CEO, is so eager to mobilize the drill rigs and get into the execution mode on discovery and growing the value further at Whistler for our shareholders.
Great. So that's just one project of the 14 that that you have. Another interesting IPO that you made, and we had the other day David Garofalo, so people can go to that video for more information. But maybe you can touch a little bit of the IPO of Gold Royalty Corp and the value that it has for shareholders as well.
Yeah, absolutely. This was really the precedent-setting transaction for our company when we started to unlock value, and that was the first major transaction that I worked on at Gold Mining and with David Garofalo at Gold Royalty, is where we took our portfolio of assets, largely undervalued and largely unappreciated by the market. We wrote very small NSR, net smelter return royalties, on key projects, put those into a new vehicle called Gold Royalty Corp. Brought in an extremely experienced CEO and chairman, David Garofalo, with a distinguished career leading major companies such as Gold Corp and working at Hudbay and Agnico Eagle, to name a few. We launched that company on the New York Stock Exchange. It raised some $90 million, again, on royalties that were within our portfolio of properties. So really that was an endorsement by the market of the projects which had the royalties on them. Gold Royalty had a very modest beginning, some 18 royalties when it started. Today, there's some 200 plus royalties. And the beauty is for Gold Mining Inc., we're still the largest shareholder. We own over 15 million shares. Sorry, 15% of the company, excuse me, some 21 million shares.
Mm-hmm.
And a nice added bonus for gold mining investors, those shares now pay a dividend. And to gold mining, we receive approximately $1 million per year in dividend income.
Mm-hmm.
So for an exploration company to have income coming in from a dividend paying stock is an added bonus to owning 15% in this tremendous growth vehicle called Gold Royalty Corporation.
Yeah, exactly. And that dividend of almost 1 million, we could argue that it paid for the exploration of La Mina of later.
Exactly.
So, and the third project that you IPO, it's the Almaden project of Nef Gold that you bought for close to 1 million and you option it for 16 million. There again, a 16x return for shareholders. Can you teach a little bit about that project?
Yeah, absolutely. That's a very interesting project that's in Idaho in the United States. And in that project, it was an earlier stage project, which was not likely to see activity within our portfolio because we had other projects we were working on. Yet there was a company working nearby in the state of Nevada, which is in the same geological district. They were very active drilling on a project there, and they wanted to add a second project to their portfolio. So they approached us and we worked together a partnership, a transaction where we let them option in this case, to the Almaden project, which was about 1 million ounces of resources, some 3% of our company's resources, so a very small piece of our inventory. We optioned it to them for a work commitment, a number of share payments. We made an investment into Nev Gold to assist them and show our support for the project. And absolutely, we took an investment of some $1 million 2 years prior and received value of some $16.5 million. And the added bonus for us is that we are now the largest shareholder of the company that's operating there at Nev Gold. They're exploring on our property in Idaho. They're drilling on their property in Nevada. We get exposure to both properties. We own close to 20% of their shares. As they make discoveries, as they grow those projects, that increases value for the gold mining shareholders by that 20% ownership interest. So it's a great partnership, a great example where we can take a project that's not active for us, put it in the hands of the right company with the right technical team in place, and it creates value for them, but more importantly, value for our shareholders.
Exactly, and that's a great value. The three companies that we talk about, them alone are bigger than the market capitalization of gold mining. But now we can talk a little bit of the projects that they don't receive any value. The 23 million ounces left, for example, and I let you decide which project, or in terms of importance, maybe La Mina or Parastate with St. George, Yellowknife. Maybe we can take a little bit of, order. You can order them in terms of importance now.
Well, maybe we'll talk about the projects that we've been active on most recently, and that is our La Mina project in Colombia. And it's a very exciting project because last year we saw opportunity for exploration, and our company initiated our first drilling program. And this was something that gold mining had not been engaged with previously. So I said, look, we have a great project. There's a tremendous target waiting to be tested. Let's bring our new expertise and team of professionals and geologists, and let's test this new target at La Mina. And last year, we drilled a very modest program. We made a new discovery at La Mina at our target called La Garucha. And just earlier this year, we announced a new mineral resource on La Garrucha, added over 1 million ounces in total resources. And the cost to add those ounces was just over $1 per ounce. So again, tremendous value. We talked earlier about how companies trade for $30 to $40 per ounce in some cases. They're being acquired by majors, often at $100 per ounce. And here we are finding ounces with a discovery in a very short time frame at about $1 per ounce. So again, creating tremendous value. That new resource at La Garrucha, which forms La Mina, we now have 3 centers very close to each other within about 1 kilometer. The exercise that we're now undertaking is we're putting together a preliminary economic assessment, which takes the resource and applies economics of a mine plan to show, what does the operation look like? How is it being operated? Capital costs, operating costs, putting that together. And that's something we aim to release to the market within the next month or two, by around mid-year, we've said. That work is well underway now. And I think that that preliminary economic assessment, or PEA, will really demonstrate the inherent value on the project. As an example, just last year, before we did the drilling, there was a PEA on that project. It's about 1 year old now, that showed that it had a after-tax NAV of some $240 million. So again, the value of one project in our portfolio, more than our entire market cap, and we've added 1 million ounces to it since then. So we'll have a new PEA coming out, which will show the enhanced value from the drilling within our portfolio. So again, by the sum of the parts, publicly traded companies on our balance sheet and cash more than the company, one single project worth more than the market cap of the company. It really starts to highlight how we have tremendous value to continue to show to the market that we are undervalued as a company.
Exactly. And it's going to be, really exciting for in 1-2 months to see that NAV to going up with this 1 million ounces. Maybe the gold price, it's a little bit higher as well in the estimation. Maybe we can talk a little bit of the first project, I believe, that was acquired, it was South George in Para State. If my memory serves me well, it had already a PEA study with 100,000 ounce per year demonstration. And you don't talk a little bit of that project. Is it relevant for the company, or it's?
Oh, absolutely, it's relevant. It's a great project. There was a historical PEA on the project. I believe that was done in 2013. So we choose, because of my background in trying to demonstrate and prove the relevancy, we want to have good, strong, credible numbers. We've just simply chosen to say, hey, that study is a little stale. It's a little dated, needs to be refreshed. The resource on the project is still very much valid. There's some 700,000 ounces of indicated, another 700,000 ounces of inferred gold ounces. It's a high-grade open pit resource in Para State in Brazil, a tremendous mining district. We're less than 2 kilometers from the major state paved highway, so great infrastructure. There's a power line that's been built by a new operation down the road that crosses the corner of our property, so we have access to power, great infrastructure, a high-grade open pit resource over 1 gram per ton in a district that's now seeing tremendous growth and investment by major companies that's really putting a lot of spotlight on our San Jorge project. So we're working with our team in Brazil, our president, Paulo Pereira, who's based in Brasilia. He's a geologist who's been with us since the start. He's helping us to develop and enhance this geological model, because what we're really showing in Para State is a growing and emerging district. Just about 70 kilometers down the road, there was a project that was owned by Eldorado Gold called Tocantins. That was sold a couple of years ago to a development company called G Mining, who's a publicly traded company. And G Mining has since then put together an extremely experienced development team of operators who've built mines throughout the Americas, particularly in South America, places like Suriname. And they're building an operation there now that attracted the eyes of the majors. And Franco-Nevada invested some $300 million to help them build this project. And Franco-Nevada is one of the top three largest gold royalty companies in the world, a real behemoth of that sector. When you see them employing that type of capital to a project, which is just down the road for us, it's putting a lot of eyes on the district. And G Mining, who's developing that, are showing that they have a great project. They've got investment from the majors. They've got a ready, willing, and able workforce, a jurisdiction that's great to operate in. And I would point out that project is approximately 70 kilometers into the jungle. I mean, it is in a very remote location compared to our San George project. You know, there's barge crossings across rivers to get there. And here we are situated, 2 kilometers from the paved highway, power line put in place by their project. So a lot of eyes are turning to say, okay, investment right now in Tocantins by G Mining and by Franco-Nevada, amongst others. What's next in the district? And San George, to me, is a perfect example of us developing a project, advancing it, where a lot of eyes are now looking to say, okay, is gold mining going to advance that themselves? Or perhaps we'll look for a new partner to work with us on that project. It really shows the flexibility and the optionality we have by a great asset such as at San George.
Okay, that's great. Have you think of that the idea of building the mine, or gold mining is going to be all spin-outs, joint ventures for other companies to acquire?
Well, I think the important distinction is that we can advance a project with our team and bring in expertise to develop a project, should we choose. And my view is that we need to be able to demonstrate that we can do it ourselves, and we can. But along the way, if we find the right partner who brings in expertise to enhance the ability and to create value for the project, of course, we'll look at those opportunities. A lot of companies rush to be saying, hey, we want to be the next gold producing company and produce 1 million ounces per year. That's not our prime goal right now. We will advance projects, but we think value that other companies can enhance our projects with really creates the most value for our shareholders right now.
Yeah, and sometimes people forget that mining, the production of mining is not sometimes what brings the best value for shareholders. Sometimes being patient, acquiring ounces for low value and then sell it when everyone comes, sometimes is the best option, right? It's what gold mining is trying to do.
Absolutely, and also I would highlight that as I've experienced it during my own career, working some 25 years for major companies, touring globally, looking at about every project that's out there. Building and operating a gold mine is very challenging. It's not an easy task. So you really need a specialized skill set. You need experienced people, and that's who we want to partner with. We want to bring the best people with the best resources to advance the best projects. I think that's a tremendous opportunity for our shareholders.
Exactly. Is any other project that would you like to mention in this first interview?
Well, I think what I will say is that amongst the projects we've just mentioned at La Mina in Colombia, we have a district where we have 2 other resources. So I don't want to go into too many projects because it gets a bit overwhelming, but I think it just shows that we have a district there with multiple projects. The same in Brazil, along with San George. We have several other projects in the district that create opportunity for scale, and particularly what larger companies are looking for. They want that optionality where they can advance one project, drill another, and create a real pipeline of projects moving at different stages and scales. So we have a great portfolio in Brazil, a great portfolio in Colombia. But one other project I would like just to highlight, because it goes back to Canada, and that is shifting to the north in Yellowknife in the Northwest Territories. It's in the northern part of Canada, but it's a very experienced mining camp that has a tremendous production history of gold. One of the largest gold mining camps in Canada in its heyday and the prime of production. And we have a project there called our Yellowknife Gold Project, which is some 1.7, 1.8 million ounces of gold. It's a very good grade resource. It's approximately 2 grams per ton. Most of that is at surface for mining. But what I like about the project is we have on that project a past producing mine. It's called the Discovery Mine. That when it was producing, it produced over 1 million ounces of gold, and get this, at a production grade, over 1 ounce of gold per ton of material, which is by 1 ounce, which by anyone's standards is an extremely high grade mine. You know, many underground mines operate at at 0.1 or 0.2 ounce per ton and talk about being high grade, or grades of maybe 5 grams per ton if you prefer metric. And to see this past producer, which has largely not seen exploration for decades, is a tremendous opportunity there. And I like to highlight how that model of taking a past producer, putting modern exploration to it, really has been the history of mining gold in Canada for the last 20 plus years. Many of your listeners may be familiar with the Goldcorp story, but really that was a story of discovery on an old mine in a town called Red Lake that saw a resurgence of modern exploration and made a major discovery of a high-grade operation, and that created a multi-billion-dollar company. The same thing happened in Kirkland Lake at the Macassa mine, which has now seen several ownerships run by Agnico Eagle now. Again, several $1 billion were created at a discovery of a mine that had been operating for almost 100 years. And then we have a new company called Osisko doing the same thing in Canada on their Windfall Lake property. Past production of high grade, saw modern exploration, and boom, they've added billions of dollars to a market cap of a company. So there's been a tremendous history in Canada of modern discoveries at past underground high grade operations, and I think that highlights the potential that we have on our Yellowknife project, which really now enters the phase we're starting to unpackage that information, putting teams and eyes on the project to highlight where the potential is. And it like our project in San George and others, it's now attracting attention from other companies who are saying, wow, we didn't know you had this in your portfolio. We see some great potential there. What are the possibilities? So those types of projects make me excited, because this was a project that a previous owner took to feasibility study. They spent some $60 million advancing it.
Oh.
They hit a downturn in the cycle, couldn't finance it. And guess who was there? Gold mining was there to pick it up at a good time. Now it's a journey we begin to unlock value from that property.
Wow, that's great. I mean, there is, as some people say, that the best part for where to explore is surrounding an existing production mine. And there was like the Discovery Mine, the giant mine in the Yellowknife project. So very good.
Yeah, no, and absolutely. And that, in fact, has been one of the reasons why, as a collective industry, our industry has struggled to replace reserves at the major companies. And in fact, if you look at a 10-year period, the reserves at the major producing companies have declined by close to 40% over 10 years. And the reason that has largely occurred is that companies were very focused on the short-term bottom line cash flows, and they cut back on exploration. So projects were not being explored. And in fact, where the exploration was focused, what we call brownfields exploration, which is the areas surrounding operating mines where it's higher chance of success, but very lower chance to add an incremental new deposit. So that's why I think the portfolio of our assets extremely scarce. The major companies need to fill holes in their production pipelines and portfolios. It's a tremendous winning combination.
Well, you have it here. Gold Mining Inc. The last question I wanted to ask you, Alastair, and we'll let you go. It's not related to gold mining. It's just in your experience, 25 years of experience in mining, would you give any advice to young people entering this sector of trying to invest in gold mining stocks or Gold Mining Inc. itself?
Well, I would like to give general advice, which I would give to any investor, which is, do your homework. Research a company and look for the key assets that I think are important. Look at the assets in the portfolio and try to understand, look at the resources to make sure that makes sense. Look at the team you have working on those assets. And what are their backgrounds? What are their histories? Do they have the right skill set and experience? And then look at the financial strength of the company. What's on their balance sheet? Is it stable? Is it likely to grow? Are they at risk of being under pressure in a down market? You look at where gold mining sits, it checks all of those boxes. It's got an experienced team of operators. It's got great assets throughout the Americas and an extremely healthy balance sheet, which are all the things that investors should be looking for. You know, there people will pitch ideas that are quick wins and overnight successes. Always question and challenge those, and do your homework. You know, there's no, as like they say, there's no such thing as a free lunch. So do the research and pick a winner. And I think gold mining has all those assets. It's an easy ticker symbol to remember. On the Toronto Stock Exchange, it's simply GOLD. So it's gold on the Toronto Stock Exchange. We're also dual listed on the New York Stock Exchange, GLDG. I'm sure you can probably post that for your followers, but easy to remember, GOLD.
Exactly. Well, thank you so much. It's been such a pleasure, Alastair. Hopefully you can join us sometimes and bring us some updates about Gold Mining Inc.
Yeah, my pleasure to be here. Thanks for inviting me here. I would love to come back and talk to you again. And if you're ever out our way in Canada, I would love to take you to come to our office for a visit, or we can hopefully get to one of our sites as well sometime.
Such a pleasure, Alastair. Thank you so much.
Yeah.